What makes a good proposal? Something good for the tax office to go, hey, you know what? Yeah, we're going to approve that. Or straight off the bat, you look at something and you go, no, I don't think you're the right candidate.
Look, we always like to look at a few factors beforehand, and we usually look at your compliance history and whether there's been some loans from the company. And in saying that just because you've had a bad compliance history or you have a director has taken a loan from a company, that doesn't necessarily mean it's going to be rejected or accepted. Either or. There can be a range of reasons why you may have had some poor compliance history in the past, and that may have improved. There could be many reasons. You may have taken a loan from the company when it was solvent. It could be could be a Division 7A loan. There's many factors that we can explain in these. The restructuring practitioner can explain in these proposal reports. I think that's too into it.
No, but that's right. I agree with that. These aren't fatal things, right? So everyone's like, I've got a loan, I've got a direct loan, I've got a Div 7A, I can't do an SBR. Well, you can. It just depends on the circumstances around it, right?
Yeah.
You know, and as you rightly pointed out, like the Div 7A loan may be correctly taken out, may be well documented, and the circumstances at the time, right, of taking out that loan, the financial circumstances warranted that option to take out the loan.
Yeah, of course.
This comes down to the essence of a restructure. Everyone's like, restructure. What's a restructure? Restructure is you're entering into an agreement with your creditors, right, to change the terms to your trading terms with them or your repayment terms with them to match your current financial circumstances. So at the time when you entered into business with these guys, it may have been a different circumstance. Your business may have been pumping.
Definitely.
All of a sudden, something's changed overnight. You can no longer meet it. You know, a restructure is, can we come to an agreement where I will pay you, we'll alter the terms of that arrangement so A, you get a return rather than nothing, and B, the company continues in existence.
Of course. A big thing to look at is what the company's going to do different to avoid getting into this situation again.
Yeah. I agree. And so we often see a lot of, it's my accountant's fault, my accountant this, my accountant that, right? So if you're going to see someone who's pointing the finger at their accountant, which we see a lot of, what would you expect to see in their proposal?
Well, I would expect to see maybe a change of accountant if that was the case. And I think that's a massive thing because a lot of your compliance history may be due to your past accountant maybe not staying on top of things, maybe you weren't communicating with them properly. We have such a broad range of accountants, clients, contacts that we know. We can always put you in contact with someone if you need a new accountant. We have plenty of those.
We can refer them with confidence. And I think also too, I think the accountant does play a big role in it, in a lot of this stuff. For me, your accountant should not just be someone who's reactive and sits there at the end of the day and just does your tax returns. You want someone proactive on the front foot. You don't want to get your accountant involved 12 months down the line where you've lost a major client. You can no longer, maintain the cash flow and required, and then you're in a pile of trouble. So I think that's important. You've got to get your accountant out there, and you've got to make sure that there is some form of change, even to the point of I've now engaged them on a weekly basis. Yeah.
Check-ins. I've engaged a business coach. Having weekly meetings with my accountant to stay on top of
that's right.
my receipts and payments, stuff like that. All that important.